Hey everyone, welcome back to Chipstock Investor. It's Nick and Kasey, and we're going to be talking about Unity software today.
Yeah, this is an excerpt from one of our weekly live events over on Semiconductor Insider that we host with our members. But we did a public Unity software video to kick off 2025. It's about 6 months later. We thought, time for a quick update, because this stock actually did, in fact, get hot this year.
You can get access to our live events via a Semiconductor Insider membership. Link in the video description to our website to sign up for that, or here on the page, chipstockinvestor.com. And you're going to see a number of charts from our friends over at fiscal.ai. They're the sponsor of today's video. Fiscal is a great partner in researching all kinds of companies and digging down deep into the financials.
For example, a chart like this one, if you're trying to figure out the profitability of a company like Unity, there are a lot of different profit metrics that the market is looking at to figure out the fair valuation, or what investors collectively believe to be the fair valuation of a company like this. And being able to visualize all those different profit metrics like this can be really helpful if you're trying to make a decision. We'll circle back to this chart later on.
You can get 15% off any paid plan with the link here on the screen or in our video description, fiscal.ai/CSI. That's 15% off any paid plan. We've had some discussion on video game companies or video game software. We were investors in Unity software at one point and are no longer, but we'll talk about some of the progress they've made this quarter.
And just a little backstory here. Our failed investment in Unity is what led to our very early bet in AppLovin when nobody even knew what AppLovin was. This is why we are big proponents of learning about industries and businesses, different markets and the companies that make up those markets, how they relate to each other, because even picking a losing stock, a losing investment, can tee up your next big win.
The reason we show you this, Unity plays in that products and services part of the hierarchy of the economy, huge market for these services. They have two market segments, the create solutions and the grow solutions. The create is their 3D software creation, game creation, especially.
Yeah, they do some work or provide that software for others, like the automotive industry uses this sometimes. We'll show you the revenue here in a moment for create. It's stabilized. The grow solutions is the really problematic part of this business that is showing some early signs of recovery. And grow solutions, basically, this is the ad business. They set this up as a way for, especially their video game content creators a number of years ago, after they make the game, to then get paid for making the game by running ads. So let's kind of look at the dynamics. This is from our video back in January for the create, the subscription software, the 3D engine. Here's a lot of their competitors. Some of their competitors, in addition to competing with Unity, also use Unity software. And then on the grow solutions part, among especially the big ad tech businesses, Amazon, Facebook, Google, Microsoft, you have these, let's call them more mobile ad pure plays, AppLovin and Digital Turbine. Digital Turbine, total mess of the business. AppLovin, obviously very much a big winner.
Maybe you're wondering, how in the world did Unity software start competing with a company like AppLovin? This is why right here, this acquisition of ironSource in 2022, which was an ad content company.
Yeah, if you remember this saga, or if you were involved with Unity during the pandemic when they IPO'd and then the post-pandemic fallout, they offer to buy ironSource, and then this tiny little company called AppLovin comes out of nowhere and says, hey, actually, if you cancel your acquisition of ironSource, we would love to merge with you. We have some pretty cool tech in the works, and we think pairing it with your Unity Create software would be pretty amazing. Blue is the growth solutions after they acquire ironSource. Things looked okay on the surface for a little bit, and then you can see it's been flatlining ever since the bear market as they try to fix that. And then the subscription software side in gray has also stabilized as well. A lot of pull forward in that during the pandemic when mobile games were pretty hot. And so they've struggled to rekindle any sort of growth for a couple of years now.
But is all of that about to change?
If you've followed Unity at all, by now you've probably seen the Q2 numbers. This is not an earnings review, but basically the revenue was flat. And they're still expecting Q3 revenue to also be flat year over year. However, if you break it down a little bit, Create, they do expect a slight decline. They had a big customer land in Q2, so they expect a sequential fall off just a bit. The Grow Solutions, they're expecting a bit of sequential growth from Q2 to Q3. Still, none of this looks exciting. This is not a growth business. What really could possibly be the upside for this? This is the big question. And this is what we thought in January. We were thinking, this company looks cheap. If the new CEO can kind of straighten things out, the new CEO has since brought in a new executive team, hired a new CFO at the end of 2024. If they can fix things, the stock was cheap. But okay, like the stock cheapness is now gone. If you've looked at the stock price, the stock has had a great first half of 2025. But what's the upside now? And it's going to be in this grow segment predominantly.
The CFO comments that they are seeing some strong momentum in the segment, and the Unity ad network represents about half of the total grow revenue. And so they feel like that part of the business is actually going to see some growth.
And here's why. In February, Unity finally announces this new AI-powered advertising platform that makes up now kind of the bulk of their Unity ad network. And they've called it Vector. So that's cute. A little AI joke for those of you that work in the industry. And this is essentially, I don't want to call it a copycat. I don't think it's a copycat, but it's kind of their answer to AppLovin's Axon AI-powered software. It's a way for mobile game and mobile app developers to find and get better installs of their apps from potential users.
And increase in-app purchases. So like on Candy Crush, if you want to power up, this is it.
Exactly. And so Unity betting on that as well. A bit behind the curve, but I guess
better late than never. Okay, but let's talk about some of their financials. So EBITDA, earnings before interest, tax, and depreciation, still in the negative, but making some improvement over last quarter. A share-based comp, still relatively high, but at least stable, and their free cash flow up a bit as well.
Yeah, this is, if you're looking at the stock increasing this year and scratching your head, wondering what is happening here, this is it. So basically the cash conversion part of profitability is at new records. And so this is, or at least multi-year records anyways. Let's look at this free cash flow on a per share basis. Because of that stock-based comp and the lack of overall more robust growth in the business, on a per share basis, it's been pretty sideways for 2 years now. So I would say progress deserves a footnote at this point. It's still too early to call this a successful turnaround story. Way too soon. The cash on balance is increasing because they are free cash flow positive and they're not buying back stock or anything. They're just kind of accumulating cash and investing in things that need fixing, like the rollout of Vector, the AI-powered ads software. The stock prices roughly doubled from where it was earlier this year, up something like 80% from when I think we released the article here to all of you. Just throw out all the valuation metrics there on the left. I think they're pretty meaningless. What we would need to see for this to be a sustainable stock price rise is not just the better cash conversion, but we need to see some actual real growth, not just stabilization in revenues, but actual growth in the business. And that is going to depend on that grow solutions, it would seem, part of the business. Kasey, are we buying this one? We didn't yet. We called it out in January. We were managing our portfolio and just didn't have room for it at the time. How about now?
Based on this report, they have made some progress, but I would say not as much progress as the market has given them credit for. That's my conclusion that I came to after looking at this. So I would say for us personally, maybe not yet.
I agree. I like that. They haven't made as much progress as the market has given them credit for. I like that line. To put it another way, we could definitely foresee a sizable correction in Unity stock at some point to kind of get the valuation kind of more rationalized with what's actually happening with the business.